Hi, future investors, and welcome to the channel where we take you back in time to look at the future. Well, this time, we'll dig up the financial follies that would make even the worst used car salesman blush. We're talking about those moments in history where someone made such stupid decisions, so clearly destined for disaster, that you just have to wonder who actually did it. Over the next few minutes, we're going on a wild ride through history, revisiting some of the biggest investment blunders of all time. Buckle up and enjoy the ride because you're in for a treat. We're about to witness some truly epic fails. Don't forget to subscribe and be sure to watch until the end. Our first stop takes us back to the Netherlands in the 1630s, a time when things were about to get, well, let's just say a little bit irrational. Picture this. Europe is in the midst of a little ice age. Times are tough, but then a ray of hope emerges. The tulip. This exotic flower, recently imported from Turkey, becomes a status symbol, a must-have for the Dutch elite. Demand exploded, and with it, prices skyrocketed to unimaginable heights. We're talking about a single tulip bulb, fetching the price of a luxurious Amsterdam canal house. People went all in, fetching utopic profits in trading. This is considered the first wide speculative bubble in history, the Tulipmania bubble. But, as every bubble, it finally bursts in 1637, leaving behind a trail of social and financial ruin. Fortunes were wiped out overnight as tulip prices plummeted, and the rest is history. Next, we sail over to England in 1720, where the South Sea Company is making waves, and not the good kind. This company, granted a monopoly on trade with the South Seas, a region rumored to be overflowing with gold, of course, becomes the hottest ticket in town. Investors, blinded by the allure of untold riches from exotic lands, are throwing their money at the company like it's going out of style. Shares skyrocket, fueled by rumors and speculation, not by actual, profits. Imagine investing your life savings in a friend's startup because he told you he's building the next Facebook in his basement, but he had no internet. Eventually, the truth surfaces. Gold rumors have been deeply exaggerated, and the fever ends, leaving countless people financially devastated. Now, let's fast forward to the 1990s, the dawn of the internet age, a time of dial-up modems, questionable fashion choices, and a little thing called the dot-com bubble. Everyone came up with an internet-related name and idea, and that was all that was needed to please Mr. Market. Fake internet companies were popping out every hour promising huge profits from this new revolution called the internet and its global impact. As long as you had the .com in your company's name, the sky was the limit. Valuations soared to dizzying heights. Investors got greedy, companies got greedy, banks got greedy. So, yeah. Obviously, the bubble spectacularly imploded in the early 2000s, and reality went from a .com euphoria to a .gone collapse. The lesson here is that all that glitters is not gold. However, as we will see next, sometimes the glow is buried just underneath the dust. Speaking of opportunities, some grab them, others throw them out the window. In the 1919s, Blockbuster, the king of video rentals, is at the top of its game, with over 9,000 stores worldwide. Families flock to their local Blockbuster to get that popcorn smell and grab the latest movie releases for weekend entertainment. Meanwhile, a small, scrappy company called Netflix, founded by Reed Hastings and Mark Randolph, was challenging the status quo. They offered DVDs by mail, a revolutionary idea at the time. In the year 2000, Netflix was struggling financially. They approached Blockbuster with an offer. For $50 million, Blockbuster could acquire Netflix and integrate it into their empire. The proposal was met with skepticism. Blockbuster's executives laughed at the idea, viewing Netflix's business model as a niche market with little potential. They literally laughed them out of the room. Blockbuster passed on the deal, a decision that would become one of the biggest mistakes in business history. As Netflix evolved, they surprisingly pivoted to streaming, eventually phasing out DVDs altogether. Netflix transformed into a streaming giant, producing award-winning original content and amassing millions of subscribers worldwide. Their success was meteoric. On the other hand, Blockbuster struggled to adapt to the digital age. With the rise of on-demand streaming and digital rentals, they couldn't keep up. By 2010, Blockbuster filed for bankruptcy. So, they could have bought Netflix for $50 million in 2000. Instead, they passed and ended up filing for bankruptcy 10 years later. Currently, Netflix has an annual revenue of around $30 billion. Yep, you heard it right, $30 billion. This was just like seeing a giant asteroid hurtling towards Earth. But instead of preparing, studying, and defending yourself, you would have just say, nah, it's too far away to hit us. I think we're good. Let's calm down and have a drink by the pool. Our next tale of woe takes us back to the early days of a little company called Apple. In 1976, Ron Wayne, one of Apple's co-founders, decides to cash out his shares for a measly $800. That's right, $800 for 10% of a company that would one day become the most valuable in the world. Well, back then, Apple was just a couple of guys in a garage with a dream and a soldering iron. But had he held on to those shares, today they would be worth $90 billion. Enough to buy a small country or maybe even a space station or two. Ron's story is a stark reminder that sometimes the biggest risk is not taking a risk at all. Now let's talk about Kodak, a company synonymous with photography for over a century. Ironically, Kodak was one of the first companies to develop a digital camera back in 1975. But instead of embracing this groundbreaking technology, they chose to stick with what they knew best: film. Why change a winning formula, right? Well, as it turns out, when the digital revolution hit, it hit hard. Kodak, once a titan of the industry, found itself clinging to a sinking ship as consumers ditched film cameras for their digital counterparts. The company eventually filed for bankruptcy in 2012, a shadow of its former self. Kodak's story is a cautionary tale about the dangers of resting on your laurels and the importance of adapting to change, even when it means disrupting your own business. It's like the old saying goes, evolve or dissolve. Next, we journey into the world of search engines, where Yahoo was the undisputed king of the internet. From its inception in 1994, Yahoo was an internet titan, reaching a peak valuation of $125 billion during the dot-com boom. However, as the years went by, Yahoo's fortune took a turn for the worse, and it was eventually sold to Verizon for a mere $4.8 billion in 2016. Going back to 1998, they had a chance to acquire a little startup called Google for a cool $1 million. Well, they passed. A few years later, Google offered itself again to Yahoo, this time for $5 billion. Yahoo lowballed the offer at $3 billion, which Google declined. Yes, you heard that right. They had the opportunity to buy Google not once, but twice, and they didn't. They passed on a company that would go on to become synonymous with search, a verb, and a global behemoth. It's like turning down the chance to buy a lottery ticket with the winning numbers already printed on it. Google must be thankful for that today. You see, sometimes the best deals are the ones you don't make. Finally, we arrive at the era of social media where Myspace, once the undisputed king of social networking, ruled supreme. Remember those days of customizable profiles, flashing graphics, and auto-playing music that made your ears bleed? Good times. Enter Facebook, a sleek, minimalist platform that focused on connecting with friends and sharing life's moments. Myspace, blinded by its own success and convinced that more was always better, doubled down on its cluttered design and confusing interface. Facebook, meanwhile, kept things simple, clean, and user-friendly. The rest, as they say, is rest. Facebook went on to become a global phenomenon, while Myspace faded into obscurity, a distant memory of the early days of social media. So remember to always keep it simple. So there you have it, folks. A whirlwind tour of some of the biggest investment blunders in history. We went deep in the waters of past failures so that you could learn from them and see how a combination of hype, speculation, and poor decision-making can lead to disastrous results. Before you rush out and invest your life savings in the next big thing, remember the cautionary tales of these epic fails. Do your research, think critically, and don't be afraid to question the hype. And if something sounds too good to be true, it probably is. Thanks for watching, and remember to like, subscribe, and share your thoughts in the comments below. As for me, I will see you back in a great future.